sounds good. Let's start with property ownership. Perfect. You know, bigger. Oh, all right. Property ownership. Let's start the. Okay. First question. Jack gives a life estate to Jill for so long as Bob lives. Upon Bob's death, the property will pass to Larry. What are the interests of Jill and Larry? A. Ordinary life estate with reversion. B. Ordinary life estate with remainder. C. Puratre with remainder, or Puratre with reversion. So Jack gives a life estate to Jill for so long as Bob lives. Upon Bob's death, the property will pass to Larry. What are the interests of Jill and Larry? And the definition of a life estate is a freehold estate that lasts only as long as a specified person lives. That person is referred to as the measuring life. Okay, so we got C and A. Let's try C first. All right, so the correct answer is C. And what is pure vata? So Jack will, so pure atrave with remainder. And the question, Jack will not get the life estate back. Jill is the life tenant and Bob is the measuring life. When the measuring life is someone other than the life tenant, the life estate is pure atrave. Oh, good to know. Larry has a future interest in the property as a remainderman. Right. Definitely a few questions on this will be on the test. So knowing remainderman, life estate, what puratre means, reversion means will be super helpful. Okay. A telephone company has a 12-foot wide easement across Farmer Jones' land, on which telephone poles are installed and through which telephone wires extend. When the telephone company goes cellular and removes the poles and wires, the easement terminates due to A. Merger, B. Failure of purpose, C. Abandonment, or D. Release. Right. Question. And then we got B. So the easement terminates due to failure of purpose is correct. All right, so this one is kind of common sense, but since everything went cellular, the wires and poles are not needed anymore. So failure of purpose, there's no easement needed, and easement of failure of purpose would then terminate an easement. Whereas a merger, abandonment, and release do not fall under an easement category. Okay, next question. The legal description of a property based on points of beginning, distances, directions, and degrees is A. So the legal description of a property based on points of beginning, distances, directions, and degrees is A. Government rectangular survey. B. Meets and bounds description. C. Recorded plat of subdivision. Or D. Lot and block description. Which legal description is based on points of beginning, distances, directions, and degrees? All right, we got B. Question in there. Right. And B is correct. So meets and bounds must start with a point at the beginning, and it could be sometimes using a monuments as markers and end at the same point. It is based on meets, distances, bounds, degrees, and direction. A government rectangular survey is how land controlled by the government is described. And then a lot and block description is how developers legally describe the property. So that's like subdivision. And then the recorded plat of a subdivision is detailed map recorded in the county where the land is located. So lot and block and record plat subdivision are similar, whereas meets and bounds has a point of the beginning and a point at the end. And the government rectangular survey is how government controls and describe their land. Okay. For a buyer to be certain that the property has no encroachments, they should obtain A, certificate of no defense, B, abstract of title, C, survey, or D, owner fee policy of title insurance. So for a buyer to be certain that the property has no encroachments, they should obtain a what? All right, so we have B and C. Try B. Okay, so the correct answer is C, a survey. So an encroachment is a physical trespass on the property by a building or structure. This would be shown by a survey, not by a title search, title insurance policy, or abstract of title. A certificate of no defense is a document used by a mortgage to state the outstanding balance on a mortgage, which, if the mortgagor does not object, will stand as the correct amount. Title insurance is an indemnity contract that ensures that the title is marketable. So an encroachment would be to make sure that the property has no encroachments, you would get a survey. And that is done by the auditor. Normally like a county auditor would go out to do a survey. Abstract title was a good guess, but that would be for lien. You would do an abstract of title, not encroachment. Okay. Which is necessary to create an easement by prescription? So which is necessary to create an easement by prescription? Is it A, all the answers listed, B, constant regular use of the land for the stated prescription of years, C, hostile and adverse use of the land, or D, open and notorious use of the land? The question. All right, so which is necessary to create an easement by prescription? And an easement is a non-possessory interest and an encumbrance on property that grants the right to use another person's real property for a particular purpose. All right, so we have A. Okay, good job, guys. I forgot that A is correct. All of the listed answers. So each of the elements listed is required to obtain an easement by prescription. Absent of any of these, the claim for an easement by prescription would fail. Oh, won't let me highlight the answers. So basically you need open and notorious use of the land, hostile and adverse use of the land, and constant regular use of the land in order to be an easement by prescription. Okay. The heirs of an estate are selling their deceased father's home. They remove a bedroom set, an organ bench that matches a built-in organ, a television, and various famous paintings. Which would be considered real property? A, organ bench, B, television set, C, bedroom set, or D, famous painting. All right, we got A. And that is correct. Good job. Being that it's built in, an organ bench that matches a built-in organ, it's built into the property, it's considered real property. Good job. Right. Wayne grants Brent the permission to use Wayne's property to fish on one hot summer day. This is referred to as a. So Wayne grants Brent the permission to use Wayne's property to fish on one hot summer day. This is referred to as a license, B, easement, C, encumbrance, or D, encroachment. All right, good job, guys. A, license. Correct. Good work. Which is not an example of common area in a condominium? A, land, B, living room, C, laundromat, or D, swimming pool. So which is not an example of common area in a condominium? All right. B, living room. Good job. I would hope someone's living room isn't common area. All right, good job, guys. Next, which is not real property? A, built-in dishwasher. B, a sump pump. C, drapes. Or D, an in-ground swimming pool. So which is not real property? All right. C. Correct. Good job. So drapes, everything else would be real property, and upon purchasing the property would come with the house, whereas drapes would be removed from the house or just left behind if like the owners didn't want it, but it was not real property. Okay, good job. Yeah, good job. All right. Which is considered real property? A, tenants fixtures, B, area rugs over a hardwood floor, C, implements, or D, light fixtures. So which is considered real property? I'm trying to trick you on this one. Okay, we have a few answers. All right, well, let's see. C came first. And it is D. So light fixtures are considered real property. Wow, this one is hard. So tenant fixtures are allowed to be moved by the tenant prior to the expiration of the lease. Implements are tenants' crops, which are allowed to be removed as well. So you are allowed to remove implements from the property, and those are crops. So if your crop, you plant your crop and it blooms prior to leaving the property, you are able to take it with you. So it is not considered real property. The light fixtures was cool. Okay. Well, we'll go back to dashboard. All right. What topic should we do next? Let's see. Okay, we can do financing. Sounds good. Financing is always tough. Okay. Question number 1. The term debt service refers to the A, amount of money in regular intervals to reduce the balance owed on a debt, B, movement of money out of a savings account into a higher yield investment, C, instrument used in many states used in place of a mortgage, or D, amount of money owed on a note or promise to pay. So the term debt service refers to the what? Guesses. This is kind of tricky because debt service would be another term. All right, good job, D. So the correct answer is A. The amount of money paid in regular intervals to reduce the balance owed on a debt. So when debt service comes into play, it's basically to lowering the amount of payments to then pay off your debt. So smaller increments of payment. Yeah, that was a tough one. Okay. A real estate firm has an in-house title company, mortgage broker, and home inspection company under one business entity. This is allowable only if A, there's no duty to disclose these relationships to the consumer. B, controlled business arrangements are clearly disclosed to the consumer and the consumer is aware that the other providers are available. C, the consumer uses the in-house lender. Or D, fees are exchanged among the affiliated companies for referrals. So a real estate firm that has an in-house title company, mortgage broker, and home inspection company under one business entity. This is allowable only if, well, right, we got B, and B is correct. Good job. So, in other words, this is an affiliated business arrangement. So, or controlled business arrangement. As long as the consumer or your clients are aware that we are affiliated with, or that the real estate firm is affiliated with the various companies, then it is allowed. They would have to sign a document knowing that we're affiliated with these companies. All right, the term debt refers to A, the transfer of real property by a private owner to a public agency. B, an instrument used in many states in place of a mortgage. C, the amounts of money owed on a note or promise to pay. Or D, the movement of money out of savings account into a higher yield investment. So the term debt refers to what? All right, D, and that is correct. Good job. When a defaulting borrower redeems the property after foreclosure, but before the confirmation of sale, which instrument will he use? A, reconveyance deed, B, sheriff's deed, C, redemption certificate, or D, certificate of title. So when a defaulting borrower redeems the property after foreclosure, but before the confirmation of sale, which instrument will he use? Yeah, this is a tricky one. I cannot remember. Okay, so the correct answer is C. So helpful here, redeems and redemption would be helpful in answering this, but this is tricky because they are very similar. So a certificate of title transfers title by will. A reconveyance deed is issued when the deed of trust has been satisfied. A sheriff's deed transfers title as a sheriff's sale. And a redemption certificate is what the borrower uses to redeem the property after the sale, but before confirmation. So definitely key is after foreclosure, but before the confirmation of the sale. Okay, good job. Okay, RESPA regulations would not apply to A, first lien residential mortgages, B, the second subordinate lien for home equity loans, C, a transaction financed solely by a purchase money mortgage taken by a seller, or D, loans for 1 to 4 family residents. So RESPA regulations would not apply to the worst thing to say. Question. Okay, cool. B, the second subordinate lien for home equity loans. All right. That was a good guess. The correct answer is a transaction financed solely by a purchase money mortgage taken by a seller. Okay, so RESPA regulations apply only to loans financed by federally related mortgages. Example, FHA or VA, or loans intended to be sold by the lender on the secondary mortgage market. RESPA applies to 1 to 4 family home purchases only. Okay. So it does not apply to a transaction financed solely by a purchase money mortgage taken by a seller. Okay. Typically, a developer slash builder would have which type of mortgage on his development? A, interest only with annual payments due. B, wraparound with a partial release clause. C, conventional, fully amortized. Or D, blanket. D, blanket, and that is correct. So typically a developer builder would have which type of mortgage on his development? A blanket mortgage. And then a blanket mortgage is the right answer, which covers more than one property with the development as parcels released as they are sold. All right. RESPA prohibits A, buyer from giving a bonus to an agent for an outstanding job. B, buyer from using their own attorney. C, buyer from receiving an estimate of closing costs. Or D, lender from receiving secret profits or kickbacks from service providers. All right, got D. Correct. So RESPA prohibits kickbacks and fees for services not performed during the closing. Good job. Okay. What financing method does not use two ratios for qualification? A, conforming conventional. B, all the answers listed use two ratios. C, VA, or D, FHA. So what financing method does not use two ratios for qualification? Oh, I do not know this one. That'd be good to know. Okay. Ooh, we got two people that get C. You're correct. Good job. No, this one. VA uses the residential income method in lieu of housing expense ratio. Residual income is what the veteran has left after paying taxes and house expenses. Right. Good guess, guy. Or good job. Okay, well, so that one does not use two ratio qualification. Okay. So RESPA requirements would not apply in which situation? Gosh, they're all about RESPA. RESPA requirements would not apply in which situation? A, a property is purchased with a federally related mortgage loan. B, the mortgage is insured by the FHA. C, the mortgage is guaranteed by the VA. Or D, the conventional loan will not be sold on secondary mortgage market. So RESPA requirements would not apply in which situation? A? All right, so correct answer is D. I really thought that was gonna be the what does not apply. Okay, so RESPA requirements would not apply in which situation? They would not apply when the conventional loan will not be sold on secondary mortgage market. Okay, so RESPA requirements apply when property is financed with a federally related mortgage loan. Federally related loans or loans made by banks, savings and loan associates, or other lenders whose deposits are insured by federal agencies. It also includes insured by FHA and guaranteed by the VA and loans administered by HUD. RESPA also covers any loan intended to be sold by lenders to Fannie Mae, Ginnie Mae, and Frederick Mac. All right, this is a tough one. So RESPA requirements would not apply to the conventional loan, will not be sold on secondary market. So, good job. What type of note calls for interest payments only during the term of the loan with the principal due at the end of the loan? That A, a term loan, B, wraparound loan, C, installment loan, or D, amortized loan. Gosh, there's a reason why I'm not a lender. All of these confuse me. So what type of note calls for interest payments only during the term of the loan, with the principal due at the end of the loan? Yeah. All right, so it is term loan. Gosh, they're so tricky. It's like I've never even heard of this loan. But it's probably another word for term loan. So the monthly payments of an amortized loan include both principal and interest. So amortized loans include both principal and interest. In a term loan, the only interest is paid each month and a lump sum principal payment is due at the end. A wraparound loan combines two loans into one for an average interest rate, and there is no loan called an installment loan. What did it get you? All right, but good guess, guys. So just knowing the vocab and knowing that amortized loan includes both principal and interest. Wraparound loan combines two loans into one for an average interest rate. And then term loan is going to be the one with type of note, calls for interest payments only during the term of the loan, and then with the principal due at the end of the loan. Good job. That was tough. Okay. What topic should we do next? Agency? Okay, cool. Sounds good. All right, an agency relationship created through a listing contract can be terminated legally without recourse under which circumstance? A, when the listing broker dies. B, when the buyer dies. C, when the salesperson becomes mentally incompetent. Or D, when the listing salesperson dies. So an agency relationship created through a listing contract can be terminated legally without recourse under which circumstance? All right, we have B as a guess. What is A? So when the listing broker dies, and that's because this is through a listing contract, and the listing broker represents the salesperson in a listing contract. So it would not be when the buyer dies, it would be when the listing broker dies. So the listing broker is an agent of record in the listing. The listing is an employment agreement. Therefore, when the employee dies, the agreement is void. Okay. Brandon lists a property. Brandon finds a buyer. Is Brandon allowed to write an offer as a buyer's representative? A, yes, as long as both parties agree to it in writing. B, no, an agent cannot select both commissions. C, yes, if it is specifically written in the offer. Or D, no, it's against federal trade laws. So Brandon lists a property. Brandon finds a buyer. Is Brandon allowed to write an offer as a buyer's representative? All right. A, yes, is correct. Yes, informed consent is required to have disclosed dual agency. So as long as both parties agree to it in writing. It's an executed contract. Okay, good job. Which of the following factors would be most significant in deciding whether a broker was acting as a buyer's agent? A, the broker assisted the buyer in securing financing for the property being purchased. B, the buyer paid commission to the broker. C, the buyer signed an exclusive representation agreement with the broker. Or D, the broker showed the buyer properties listed by cooperating brokers. So which of the following factors would be most significant in deciding whether a broker was acting as a buyer's agent? The buyer signed an exclusive representation agreement with the broker. is correct. Yes, and these are going to be more and more common. So buyer representation agreement is another term for it. So it's an exclusive agreement between the broker and the buyer. And that is the most significant when deciding that the broker is representing the buyer. Good job. All right. A licensee has secured their first listing contract. The licensee most likely is considered a blank agent. The licensee is considered a limited agent, a B, a universal agent, a C, a general agent, or D, a special agent. Right. Thinking D. And D is correct. A special agent committed to doing one thing for a client. Example, marketing the home. Good job. A universal agent must do everything for someone. Example, guardian. A general agent does more than one thing, but not everything for a client. Example, property manager. And there is no such thing as a limited agent. All right, good job, guys. All right, next question. A listing broker tells their buyer client that the seller is anxious to sell because they are delinquent in their mortgage payments and do not want the property to go into foreclosure. Such a disclosure is A, only permitted if the mortgage lender authorized the disclosure, B, acceptable if it results in an offer and quick sale of the property, C, required because of the buyer, or D, unacceptable because of the fiduciary duty owed to the seller. All right, we have B. Very cool. D's throughout the chat. So D, unacceptable because the fiduciary duty owed to the seller is correct. Good job. Which is the best example of a special agent? A, a property manager, B, a limited agent, C, a real estate licensee, or D, universal power of attorney. Best example of a special agent, cool. I'll say C. And that is correct. So the best example of a special agent is a real estate licensee. Soon to be that. And then the good example for a general agent is going to be a property manager. Definitely good to know that. And then a universal agent is a universal power of attorney, or just a power of attorney would be a universal. Okay, which is the best example of a general agent? A, real estate agent, B, universal power of attorney, C, power of attorney given specifically to transfer an automobile, or D, property manager. And correct, it is D. Good job, guys. Yeah, and so just knowing the differences between the various agents will definitely help you on the test. I think I did have a few that asked me, or a few questions about general agent, universal agent, and special agent. Once established through a listing agreement, what fiduciary duty does not ever end? A, loyalty, B, financing, C, obedience, or D, confidentiality. Right. D, good job. Yes. Confidentiality never ends. So an agency relationship created through a listing contract can be terminated by the A, buyer principal renouncing the agency relationship, seller's or broker's death. C, agent executing a buyer agency contract, or D, agent discarding the agency disclosure form. Okay, good job. And B is correct. A listing agreement may be terminated if the death of either the seller or listing broker occurs, or either incapacity of either. Good call. You guys are doing so great with agency. S&T Realty had a listing on a property. After the property sold and closed, P&M Realty asserted its rightful claim to the commission. Which type of listing did P&M Realty have? A, open listing, B, exclusive listing, C, net listing, or D, exclusive right to sell listing. Definitely get the question. All right, we got D. And it is A. Oh, I thought it was D too. So only the procuring broker is entitled to the commission in an open listing. Oh, so they're assuming that S&T Realty did not get any commission. So this was tricky when wording it. So P&M Realty are only the ones who got commission on this. An open list, we do not have open listings in Ohio, so this is tricky because they don't really touch upon it in the classes since it doesn't apply to our state. But just knowing the difference between each one of the open listing, exclusive listing, net listing, exclusive right to sell listing is going to help you a lot on this. All right, next topic, transfer title. Sounds good. Okay. An affidavit of title is A, disclosure of property's known physical defect. B, sworn statement that the title is good. C, disclosure of the relationship in which one party acts for or represents another. D, pledge of real property as security for repayment of debt. So an affidavit of title is a what? And title is actual lawful ownership of real property. This is not a document, but rather a concept or theory dealing with ownership. All right, we have B, and B is correct. So affidavit for title is a sworn statement that the title is good. Good job. All right. An abstract of title is a written declaration by a person executing an instrument signed before an officer authorized to give a note. B, contract whereby a title insurance company indemnifies the owner against loss due to defects and hidden risks on the title. C, sworn statement that the title is good. Or D, chronological summary of the essential provisions of every record document pertaining to a particular parcel of land. So we know that sworn statement that the title is good is an affidavit of title. All right, so we say D. And D is correct. Yeah. So that is a chronological summary of essential provisions of every record document pertaining to a particular parcel of land. Abstract of title is chronological summary. I always think like a timeline when I think of abstract of title. Good job. The most complete title protection is offered by A, A, abstract of title, B, standard title policy, C, certificate of title, or D, extended coverage policy. So the most complete title protection is offered by A1. D and D is correct. Good job. This one's tricky. When you don't see common definitions or anything, you tend not to choose the answer, but just reading it, the most complete title protection is offered by extended coverage policy. These questions are the ones that would get me every time. So good job, guys. Okay. Title to real estate is transferred when a deed is A, recorded, B, signed, C, delivered and accepted, or D, acknowledged. So title to real estate is transferred when a deed is everything. B, signed. So it's D, delivered and accepted. You're correct that a deed must be signed by the grantor and acknowledged by the grantor in front of a notary, but a deed does not have to be recorded. The transfer title occurs when the deed is physically given to the buyer and the buyer accepts. Oh, that was tricky. So title to real estate is transferred when a deed is delivered and accepted. A deed does need to be signed, so that is also a correct answer and acknowledged by the grantor. So all these are technically right, but the best answer is going to be deliver and accepted because the transfer of title occurs when the deed is physically given to the buyer and accepted. So when this specific action is done, delivered and accepted, then the title to real estate is transferred. But all these are incorporated in the deed, so that was hard. So a mortgage company typically requires title insurance to cover the A, mortgager, B, mortgagee, C, seller, or D, mortgagee and mortgager. So a mortgage company typically requires title insurance to cover the person giving the loan is the mortgager. The person receiving the loan is the mortgagee. B and B is correct. Yes. Mortgage company, mortgagee requires insurance only to protect itself. It may be advisable, even customary for insurance to be purchased for the borrower, mortgager, but is usually not required. Did I say that one? The mortgagee, mortgage company, so ignore what I just said. So mortgagee equals mortgage company, and the borrower is the mortgager. Mortgager, OR equals borrower. Definitely good to know. Yes. The lender is the mortgagee. Good job, guys. Okay. Well, we're gonna have time for one more topic. What category should we do? Any specific category you guys want to go over? Want to do valuation and market analysis? Like we haven't done that in a while. Let's do this one. Okay. What would not be depreciated? A, unimproved land leased for open storage. B, an abandoned building. C, a residential property used as a rental. Or D, a 2,700 square foot commercial building. So what would not be depreciated? Might be. And it is A. Okay, so an unimproved land leased for open storage. Only improvements, example, building, are depreciated, not land. Oh, good to know. So land is not depreciated. So unimproved land leased for open storage. Tricking you by saying the open storage comment, but good to know. So land cannot be depreciated. An insurance company might use an appraisal to determine A, the ethnic composition of a neighborhood for better rate estimate. B, replacement cost to determine the amount of coverage required. C, market value. Or D, none of these answers. So an insurance company might use an appraisal for, or may use an appraisal to determine what? B. Correct? Yes. So B would be replacement costs. So the insurance, the amount of insurance required for the structure. So they would want to use an appraisal to determine that. A lot of times we are looking at it to price a property, but really it depends on the time of purchase, the area. There's so many things that come into effect with the market value. All right, an expensive home in a development of less expensive home suffers from A, functional obsolete, B, plottage, C, physical obsolescence, or D, economic obsolescence. An expensive home in a development of less expensive home suffers from D, and D is correct. Yes, so this would be a misplaced improvement suffers from regression. Good to know, definitely know regression, economic obsolescence. It would be unethical for an appraiser to A, ask for payment in advance, B, refuse to make commercial appraisal because they have only residential experience, C, base their payment on a percentage of the appraised value, or D, appraise a property in which they have disclosed interest. It would be unethical for an appraiser to base their payment on a percentage of the appraised value. Dark guess? And that is correct. Good job. So it would be unethical for an appraiser to base their payment on a percentage of the appraised value. That was a tricky one. Good job. Which would enhance the value of real property? A, an above ground pool. B, a toxic waste dump being built next door. C, a picture of Mona Lisa hanging in the hallway. Or D, a 2-car garage. Which would enhance the value of real property? Or the idea 2-car garage, and that is correct. So the above ground pool and the picture are both personal property, so they are not considered real property. And then toxic waste dump, obviously, nobody would want to live next to it. And the 2-car garage would be the best answer and would increase economic value. All right, staff appraisers might be used by a large corporation with many properties to manage. So on-staff appraisers might be used by A, large corporation with many properties to manage. B, both a large corporation with many properties to manage and a large mortgage company reviewing hundreds of appraisals a year. C, large mortgage company reviewing hundreds of appraisals a year. Or D, homeowner who wants an estimate of value. B, and that is correct. Good job. So both the large corporation and large mortgage company, aka lenders, often have staff appraisers. An appraisal is the A, value divided by gross income. B, cost less depreciation for age and condition. C, support opinion of value. Or D, utility. So definition of appraisal. C. And that is correct. So an appraisal is an opinion of value based on objective evidence and data. The period of time in which a building procedures income attributable to the structure itself is it A, functional obsolescence, B, economic obsolescence, C, effective age, or D, economic life. So the period of time in which a building produces income attributable to the structure itself is it what? Okay. Yeah. So it is actually D. So the key thing is the period of time. So when you're on the period of time, it could either be effective age or economic life. So economic, so then when property no longer returns in an income attributable to the structure itself, it exceeds its economic life. So when an effective age is the age that the property appears to be not its actual age. Yeah. Okay. Which approach to appraisal is best for existing single-family residences? A, cost, B, income, C, estimate, or D, comparison. So which approach to appraisal is best for existing single-family homes? So which one would you guys be doing? All right, we got a few answers. And D is correct. So the comparison approach takes into consideration what properties similar to the subject are selling for. Overall is the most accurate approach. So which approach is appraisal best for existing family residents can be the comparison approach. Income approach is used in commercial buildings. Cost approach is if you're like using the same building as like a school next door. If like you're building another school, you use a cost approach. And then I don't think there's anything such thing as an estimate approach. Yes. Yeah, good job. Income equals net. And then cost equals unique example of the church. Yeah, good job. I'm just sharing it with the group. What defines highest and best use of land? A, the use of the land results in the highest net income attributable to the land. B, the land is in compliance with zoning and deed restrictions. C, the land procedures the highest total gross annual income. Or D, the use of the land allows for minimum depreciation. So land does not depreciate. So what best defines highest and best use of land? Oh, sorry, guys. Oh, it actually put questions were listed. Yeah, this is tricky. Sure, all right. Let's try A. All right, A. So what best defines highest and best use of land? The use of the land results in the highest net income attributable to the land. So that would be the best definition of highest and best use of land. But C was also a good guess. All right, good job, guys. Oh, we covered some solid material there. We got a lot of topics in, a lot of categories in there. I'm just gonna share CompuCram study guide in the chat for you guys to reference. I just saw. Oh, there we go. And then in this study guide, there's like links to then like Quizlets, and basically the Quizlets give examples of questions like this. So it's super helpful to use it because then you can just create yourself little quizzes using the Quizlets with questions from CompuCram. So definitely check that out. And then if you need like access to anything, some of it might be in Google Docs. So just feel free to just ask for access and I'll just give it to you in an email. Yeah. All right. Well, thanks so much. Thanks for participating, everyone. And I will see you next week. Bye. Have a good night.